Welcome. I would like to briefly go over with you the benefits and rewards of private mortgage investing in this video. In the previous video, we went over the risk and how you are able to mitigate these risks. Once you always cover your downside, the upside will always take care of itself. There's no other investment method where you have so much control over the downside and being able to mitigate the risk, and then you get all these benefits that I'm about to talk to you about. So one of the first things that I want to discuss is pretty much the foundational reason of why you should look at having private mortgage investing as part of your portfolio. And this is, you have 100% control over your money, and you have 100% control over what private mortgage to invest in. Let's say you have a private mortgage come across your desk, or you have several. You can look at which one meets your risk criteria, and then you can also find out which ones give you the type of returns that you want, and you can make the decision. Now, I just explained to you probably one of the more important key reasons of why people invest in private mortgages. I'll really briefly want to go over some of our terminology. So to do this, I'm going to say we have a house that's represented here at $500,000. That is the value of this house. So what we look at is a loan to value, LTV, and the loan to value is based, of course, your loan to the value of the property. So your loan to value should never exceed anywhere from 60 to 70%. Now sometimes it can be obviously much lower, and in some cases it can be higher. However, that 60 to 70% loan to value provides a very nice, what we call, equity cushion. So for instance, a $500,000 house at a 60 to 70% loan to value means that you would have a loan against this property for $300,000 to $350,000. That provides you, as the private mortgage investor, an equity cushion of $150,000 up to $200,000. The greater the equity cushion, the lower the loan to value. So you see how the correlation happens. Those are some really big key numbers and metrics that I want to have you keep in the back of your mind as I go through describing the benefits and rewards of private mortgage investing. You can create that protective equity cushion as much as you want. Maybe you're more averse to risk, you prefer much safer deals. You can get a much lower loan to value, let's say 50%. Imagine having a $200,000 loan against a $500,000 property. I think that the borrower, whoever you lent to, is going to do everything in their power to make sure that you are paid your monthly interest payments, because they don't want to lose a $500,000 house. They want to keep that house. Another good reason for private mortgage investing is the fact that you can hedge against the market fluctuation. And you can do this by two ways. Number one, we just covered, was your loan to value. The greater the loan to value, a little bit more risky the loan is. The smaller the loan to value, the safer the loan is. You can also hedge against the market by creating shorter loans, meaning a shorter time frame. If you make that loan, let's say you do a 70% loan to value on a $500,000 house, that's $350,000. At year one, the property values start to drop. Year 2 and 3, they're just falling out the bottom of the barrel. Now, in year 5, everything finally levels out like it did in 2011, 2010. And what we have now is a property that, let's say it did lose 50% of its value. Well, guess what? As an investor, you've got a $350,000 loan against a property that is now worth $250,000. That puts you in a bad position, especially if that borrower decides to wipe their hands and walk from the deal. To prevent that from happening, again, the control is 100% in your hands. You create short-term loans, anywhere from 6 to 12 months. This is leverage, and we all understand when you say the word leverage, most people immediately think of financial leverage. The leverage that I'm talking about is your ability to leverage other people's knowledge, understanding, and wisdom. King Solomon spoke about this in the book of Proverbs. He said that wisdom and knowledge and understanding were more valuable than gold and silver. So what could be more valuable than actual money, right? Well, I wanted to talk to you real briefly about other people's time, other people's experience, and other people's education. What you're able to do in private mortgage investing is build a team. Imagine having a team of attorneys, of closing agents, title companies, a team of brokers and real estate agents, appraisers, contractors, subcontractors, all these people that have decades of experience, literally all working for you as the private investor. You can't find that anywhere else. There is no other investment method that allows you, the private investor, the private mortgage investor, to have ultimate control and authority over what your investments go, where your investments are at, and on top of that, you're getting to leverage all these other professionals in their respective industries to make sure that you are making as wise and as sound and as a solid financial decision for you and your family's generational wealth. In no other investment method do you get to contribute back to either a local economy, a geographical economy, and even on the national level. No other investment are you able to provide jobs. When you make a private mortgage loan to someone else, you immediately create jobs. You are creating work for someone. You're creating work for the drywall, the plumber, the electrician. You're creating work for the general contractor. You're creating work for the borrower. There's no other investment where you invest your money into something and you actually increase the value of that neighborhood, increase the value of that community. There's no other investment opportunity that provides that. Some of our partner investors really love the fact that they get to pick the actual risk versus reward type of loan. If you want to do a first position loan at a low LTV, of course your return is going to be lower, but you are really protected. You can take a little bit step out of the box, if you will, and you can make a higher risk loan. However, it still has to fit within your lending criteria and guidelines, so therefore you still have ultimate control. And therefore you can make a higher risk loan, let's say a second position at 75%, but maybe the returns on that could be double-digit returns. I wanted to talk to you about one other thing that is extremely exciting for me, is that there is no other investment method to where you get paid monthly. Some of our partner investors love the fact that every month they get a check in their mail for a set dollar amount. They knew exactly what that amount was going to be before they even closed on the deal. And then at the end of your loan, you get your capital back, you get your principal back. So let's say you made a loan for 6 months. You get paid monthly interest payments every month, and then at the end of that 6 month, you get your capital back. Another incredible thing is that there is no hidden cost. In this style of investing, the borrower has to pay for everybody on your team. So the attorney that you hire to draft your documentation, the servicing company that you hire to make sure all the recording, all the documentation is done and make sure that everybody receives their payment when it's supposed to happen. The closing company who you hire to handle the closing to make sure that all the documentation is signed at closing, that the borrower signs theirs, that everything is done properly and recorded in the county. All these teams that you have in place, the borrower pays for that. So that you know, as a private mortgage investor, before you even do the loan, you know exactly how much you're going to make every single month. Again, real briefly, I wanted to cover the ability to mitigate your risk. If you don't remember, you can watch the previous video. We go in detail about how to mitigate your risk and why that is so important. But remember, at a basic level, if you don't like the borrower, they give you a bad vibe, they just give you a bad sense. You're the lender. You don't have to do the loan. If maybe the borrower was involved in some litigation or some legal issues, or maybe they're going through a divorce, or whatever the case may be, if they present a risk to you as a private mortgage investor that you are not comfortable taking, you have 100% control to say no to that loan. Now, these are some of the big benefits of private mortgage investing. I'm glad you've taken the time to watch this video. Now, some of you may be seeing this and maybe you've watched the risk, you've watched this, and you're raring to go. Wow, I really want to do this, Ed. I see the benefits of this. I see how it can exponentially create and build my family's generational wealth, but I don't have the $500,000 to get started, or even the $300,000, or even the $100,000. Maybe you don't even meet the requirements of a sophisticated or an accredited investor issued by the SEC. Well, what if I could show you how you can participate in opportunities without providing 100% of the funding required? How you can use money as a tool the way it's supposed to be used to help you create and build your family's generational wealth without you having to quit your day job or your career. How to leverage other people's time, experience, knowledge, education, remember the leverage, and build that team so that you can save thousands, yes, thousands of hours and even dollars creating this network yourself. And most importantly, what if I could show you how to tap into wealth streams, capital that you never knew you had access to? If your answer is yes to any of these, then what I would encourage you to do is go to the bottom of the page and click on the Contact Us button. Thank you for the time to watching this video and spending some time with me as I go over the benefits and rewards of private mortgage investing. God bless you and your family, and I look forward to spearheading your investments for the future.